welcome. Joining us on this special broadcast is Mr. Varun Dua. He is the CEO of ACKO Insurance. Thank you for speaking to Republic, Mr. Dua. My first question to you, what does the insurance industry expect from the Union Budget 2024?
Thank you for having me. There are a bunch of changes I think the insurance industry is been looking forward to. I think maybe more from the customer side, if I were to look at it, we are one of the few countries in the world, unfortunately, that still tax life insurance and health insurance at 18% GST. If we want health protection for the country, life protection for the country, so that citizens are well covered and they do not fall into financial stress because of somebody's death in the family or the family landing up in the hospital, we cannot be taxing these products like sin tax. It's almost 18% GST is sin tax. Lots of countries in the world for health insurance or for insurance in general have very minimal to no tax on the product itself. So I think this is one thing that has been the industry's demand for a fairly long time. So this is one area that I think it'll do the country well. It'll increase penetration. That I also personally believe has been the government's mandate to increase penetration of insurance. And I think reducing GST on products like health insurance will go a long way in helping citizens make the products more affordable. We cannot have 18-20% on products like health insurance. This is at least my view. Second, I think from the insurance standpoint, it's an exciting time. The industry is growing really well, and the government is, what we believe, is contemplating allowing universal licenses, which is a general insurance company and a life insurance company could be a single company rather than having to be two separate legal entities. We know this is being considered deeply. We do not know, however, whether it will come through this budget because it's part of the Insurance Act, and it cannot be done at the regulator's end. It needs to be done at the government's end through the budget, through changing the act. This can throw in a lot of efficiency because companies can do both general and life. The risk gets diversified, capital requirements come down, there's more efficiency, there's more products a single company can offer a particular customer. So I think these would be the two big areas, at least the insurance sector would be looking at: reduction of GST and on the corporate side, allowing companies to come together as a single entity to offer all kinds of products versus living in a world where one company can offer only one type of product.
All right, so not just on the regulatory front, but if you could also be more specific when it comes to the technology front on the kind of intervention you'd need from the government.
There are a couple of areas. I'm not sure that they fully fall under the ambit of the budget per se, but we do not today have a central repository of all insurance fraud data, or even if we do have, it's not quite adequate. Exactly like how we have CIBIL scores or credit scores that are today utilized for lending and banking, I don't think we have any very specific insurance scores. India is also one of the few countries where insurance fraud is rampant. People misuse insurance and there are no penalties. You can't take somebody to court or take a consumer to court if there's insurance fraud. So if we talk about technology, rather than taking consumers to court when there's insurance fraud, I think building fraud databases, having access, sharing information between insurers, this is an infrastructure that the government and the regulator are helping create, but I do not believe it's fully there. So whether it's KYC, whether it's understanding fraud, whether it's making services easier available to customers. I'll maybe add another example here. There's an initiative on the technology side that's being worked on called the Health Claims Exchange, which has been worked out by the NDHM, which is the Health Ministry, National Digital Health Mission, which allows hospitals and insurers to talk to each other by being on a single platform. Today, we are not on the same platform. So every bill looks different. And when every bill looks different, it takes a lot of time to process versus everybody being on the same protocol. So these are a couple of technology interventions. I think fraud, claims exchange, building a single repository, ensuring people don't do fraud so that genuine citizens and genuine claims could be paid much faster. I think these are areas where the government is doing its job. I think the regulator is also doing his job. We're all headed in the right direction, but these are complex initiatives. But we do see the government taking a lot of steps in this direction.
Also, if you'd like to add more inputs in terms of what can be done when it comes to increasing the insurance penetration in the company, vis-a-vis changing mindsets of the people with regards to the landscape of digital insurance.
I think 2, 3 things are needed. First, I think what the industry and the government can do together is really bring down the cost of insurance for customers. And by bringing that cost down, you will probably need different kinds of insurance companies. If you really look at the banking model today, we have the universal bank, we have the small finance bank, we have the payments bank. There are 3, 4 types of banks, rural banks, cooperative banks, all trying to cater to different parts of the population in some sense or the other. Today in insurance, we don't have different kinds of insurance companies. We have just a universal insurance company. There is no small finance sort of insurance company, which is trying to cater to a small state or some rural districts. So everyone's really focused on the metros or the top 20 cities. So I think we will probably need different types of insurance companies. One step that has already been taken in this direction is, as we speak today, the regulator in India has allotted one state to every insurance company. For example, ACKO is responsible for increasing penetration in Assam. There are other companies which have been allotted other states. So all of us are going state by state to try and improve penetration and awareness for those customers who are yet not into the fold of insurance. I think this is one area with new insurers sort of coming in and being allowed to focus on specific parts of the population. The second piece, and it's a great success, which we've seen in the mutual fund industry. I continue to draw parallels from banking and mutual fund. In the mutual fund industry, Mutual Fund Sahi Hai has been such a large campaign. We are seeing record inflows into the equity markets in India. And to the extent that we no longer depend on FII capital as far as pricing stocks is concerned, or the liquidity that is required for stock markets. All that happened through a mass awareness campaign that has been running with cricket celebrities and other celebrities for the last 4 or 5 years, where mutual fund Sahi has become common, like we have the highest inflows ever. I don't think that level of penetration is possible in insurance unless the insurance industry also comes together along with the government, like AMFI did or SEBI did, to popularize insurance, to make people understand that insurance bhi sahi hai. In whatever new way we can we can do that. I think that mass awareness has been lacking. If we can be honest as an industry, I think that needs to happen. So I think the answer there is two-pronged. One, we definitely need to create mass awareness. It's not there. Beyond the top 30, 40 cities, I would say the awareness is very low. And the second is we need different types of insurers, like small finance banks, like payment banks, probably to cater to different parts of the population.
And talking about car insurance in specific, how do you see the Union Budget 2024 affecting the car insurance market, especially with any proposed changes in vehicle-related taxes or even incentives?
We do see some changes. I think one of the, I do not see any direct impact at the moment, is as far as the budget is concerned, this particular budget is concerned. But the Ministry of Road Transport and IRDA, which is the regulator, they work together in deciding the rates of premium, of third-party premium. Those have been under pressure for some time. We do not know which way it will go at the moment, but I personally do not believe any direct impact will come up from the imminent budget right now on motor insurance per se. Maybe a larger comment on motor insurances. I think third-party liability, which is a part of your car insurance, like I said, that is decided by the government. The rates are decided by the government. The industry has been looking forward for deregulation because we believe the prices can be cheaper, better, if this part is deregulated. I think the regulator is looking at it. But I don't think that this is a part of this budget. It will happen on its own in due course, is our understanding.
All right, on that note, many thanks for speaking to Republic.
Thank you. Thank you so much for having me.